Hello guys, welcome back to another video. Today we're gonna be very short, but very into it. All right. So this week has been a pretty volatile week towards yesterday, because since Monday until Wednesday we didn't have much things happening, and then yesterday we had the Bank of England coming and making the rate decision. And being very honest, if you were on my webinar, you would notice that I was talking about, yes, the most probable scenario is another pause. Now, I was reading the minutes this morning and the rate decision this morning, and I've even made a blog on that. So if you don't know, we do provide researches every day. So the way to access those researches is you go to the website, ACY website, and go into Learn and then Market Analysis, and then you will be able to have those daily researches delivered to you onto the website, of course. Now, I made a blog, so you're more than welcome to go in and have a look. But pretty much they are saying the exactly same thing as they say on March and on May. Okay, so on May they say that inflation have come to 2%, so that's good. That's what they wanted, and this is how they commemorated. But the thing is, the consumer spending is still very high. And therefore they need to see the consumer spending, coming lower. Otherwise, let's say if consumer spending, if they go in and cut 25 basis points, okay? So the decision was 7 against 2. So 7 of the members decided to leave the rates and change it, and 2 members decided to cut. Of course, the majority was the 7. So this is why we had a pause. Now, the thing was, when we look to the March, May, and now June rate statement, we can see that they are waiting for the the consumer expenditure comes lower. Because let's say if they go and cut 25 basis points, things will become cheaper in a few months, and then spending will increase. So if spending increase, then the inflation goes above 2% already again, and then the whole thing starts to happen. Inflation gets higher, and then we're gonna get tricky again, and it's not worth it for them to take this risk at this moment. Okay, this is the only thing that I want you to understand. The pound has suffered a loss during New York session as well as Asia session, and now going into London session. London session, New York session, and now Asian session. So basically, all the 3 sessions have been negative for the pound. Mainly due because of the rate statement being very dovish, data dependent towards neutral, but definitely not hawkish. Now, we do have a few more data coming in today. We have the retail sales that will be expected to be, the consensus is for the month over month 1.6% for UK. Okay, 1.6%. The previous was negative 2.3%, and then we have the year over year expected to be negative 0.9, and the previous was negative 2.7, and the core retail sales year over year and month over month as well. 1 hour later, 1 hour and a half later, we're going to have the German services PMI and the German manufacturing PMI. That this is very important for the euro, because as I've always told you guys, the Eurozone German holds a big portion of the Eurozone trades, trade in and trade out. So therefore, it's very important to us to know. The German manufacturing PMI is expected to be 46.4 from previous 45.4. The services PMI is expected to be 54.4 and the previous 54.2. Okay, so the manufacturing PMI is expected to come higher, and the services PMI is expected to come 0.2 higher as well. And then a few minutes later, we're going to have the services PMI and manufacturing PMI as well for the Eurozone and for the UK as well. All right, so that's composed PMI and services PMI, sorry. Core retail sales and retail sales for Canada. And most important for today is that manufacturing PMI and services PMI, S&P Global Composed PMI for USA. Okay, that's going to be later in the night if you're on Sydney, but we're looking for consensus 51 for the manufacturing PMI and the services 53.4%. So both of them are looking to come lower than the previous. Okay, for manufacturing PMI, previous was 51.3 and services PMI was 54.8. So there are a big difference. If we see Euro services PMI and manufacturing PMI coming higher, then we could be looking for a higher Euro dollar, but most probably we will see a higher USA and a lower Eurozone. Okay, this is my personal opinion. And then tomorrow it's Saturday. We're gonna have the Fed monetary policy report at 1 a.m. from Friday to Saturday, and this is it. We ended up another week. Guys, this is all I have to present for you all. Please subscribe to the channel, give us a thumbs up on this video and share this content with your friends. Be ready already for next Tuesday webinar. Okay, it's gonna be from 5 to 6 p.m. on Sydney time, so I will wait you there. And if you are not yet on the Telegram channel, please do it so, going at the description of the video, or maybe in the comments, but most probably in the description of the video, and clicking to join the Telegram channel link, and you will be more than welcome over there. All right guys, have all a great weekend ahead. You know, chill down, relax a little bit, and I see you into the next week. See you guys, bye bye.